Good day and welcome to today's class. In our last class, we discussed trial balance. Now, in this class, we are going to extract trial balance from Adeyemi's. We are going to extract our statement of profit and loss account and our statement of financial position for Adeyemi trial balance. Now, this is Adeyemi's trial balance. The trial balance has already been given, so we do not need to start arranging the trial balance or writing it up. I believe I explained how to go about getting the amounts in trial balance in the last class. Now, Adeyemi's trial balance was extracted as at 31st December 2019. Bank 15,000, capital 30,000, loan 30,000, van 40,000, stall 5,000, purchase 18,500, trade payables 4,500, trade receivables 1,000 naira, sales 21,000 naira, drawings 6,000 naira. The total of the both of them are 65,000 naira. That means the debit and the credit are equal. In all trial balances, the debit and the credit side must be equal. If they are not equal, you know that there's a problem wrong in that trial balance, and then you will need to solve that particular trial balance. Now let's go to our statement of profit and loss. It's very simple. Every company either has a profit for that year or a loss for that year. The profit and the loss, it's very easy to calculate the profit and the loss. Now, the statement of profit and loss for the period ending 31st December 2019, which most companies use, is to be used here. But sometimes it might not be so. Now, we are calculating the statement of profit and loss for Adeyemi. Sales is 21,000 naira, which will be. Now, in this statement of profit and loss, we don't have debit and credit as explained before. There are no debit and credits in statement of profit and loss. What we do in statement of profit and loss is to calculate the sales, the purchases, and then less the expenses to get the profit or loss for that year. Now, the sales that year was 21,000 naira. The company was just starting, so there was no inventory. So the opening inventory was 0 naira. Purchases 18,500 naira. If there was an inventory, we would have added the inventory to purchase, but since no inventory, it will still give us 18,500 naira as goods that we purchased that year. Then inventory as at 31st December of that year was 4,500. That means all the goods that we purchased, the one remaining that we did not sell off during that year was 4,500 naira. We subtract that from the purchases to get 14,000 naira. That means the cost of sales was 14,000 naira. The cost of sales was 14,000 naira. Now we subtract it from the sales. When we subtract it from the sales, we discover that is 7,000 naira that is left. That means the gross profit now is 7,000 naira. After getting the 7,000 naira, the next thing we do is to less expenses. Now in this Adeyemi, there are no expenses. There are no expenses. The van is not an expense. The van is not an expense procured in buying the goods. It's not an expense procured in buying the goods. The stall is not an expense procured in buying the goods. When you are buying goods, if there's any expense while you are selling the goods or purchasing the goods, you add it. That's when you add it to your statement of profit and loss account. But apart from that, no other expenses, which means that the expenses is what? Zero. That means they have a gross profit of 7,000 naira, and which gives us our net profit of 7,000 naira. But if there were expenses and the expenses were more than the gross profit, we will be having a net loss. Let me come back again. If the gross profit is 7,000 naira and then we have expenses, and the expenses are 15,000 naira, that means we'll be having a net loss of 8,000 naira. I believe that is understandable. It's very easy to find our statement of profit and loss account. Now that takes us to statement of financial position. Now, after finding statement of profit and loss account, we can now find statement of financial position. They usually go side by side. Use trial balance to find them statement of profit and loss, and then you still use trial balance to find the statement of financial position. Now, in financial position, you have to state them the way you were, or the way I said in the last class. Your non-current assets come first. After you've done calculating your non-current assets, you calculate your current assets. After the current assets, you calculate your current assets, then that will give you the total assets. These total assets should be the same thing with the total liability. Let's go so that you see and understand what I'm trying to say here. Now, non-current assets. Van is an asset, which is a non-current asset. Remember, I told you non-current assets means that they will span continuously for over 12 months, over 12 months. So it's non-current assets, and van is a non-current asset, which is 40,000 naira. Stall is a non-current asset, which is 5,000 naira. Then we have the total, which is 45,000 naira. We add that to our current assets. Now, current assets, we have inventory. That is what is remaining, that goods remaining. Inventory, that inventory remaining at the end of the year, is an asset to the company, 4,500 naira. Then trade receivables, 1,000 naira, that is money being owed to the company. Then bank, that is cash at hand, which is 50,000 naira. Total is 20,500 naira. So when we add it to our non-current assets, our total assets will now be 65,500 naira. I hope you are following. If you do not understand, you can always ask us questions. We'll be at your beck and call. Now, after calculating our total assets, the next is to calculate our total liabilities. In statement of profit and loss, statement of financial position, our total assets must be the same thing with our total liability. If it's not the same thing with our total capital and liability, you know that particular thing is what? Not correct. You have to go back to your books of accounts and look for where the errors were made. Now, that will take us to our liability. Remember, capital is a liability. So to start the business, the capital will be written. Now, the capital introduced into to start the business, which is 30,000 naira, is a liability. Then net profit for the year, which is 7,000 naira. Remember, our net profit is a liability because the company is now owing that. Then that will give us the 7,000 naira. Then with less drawings, Adeyemi made drawings. He withdrew from the capital and net profit, which is 6,000 naira. So capital at period end is 31,000 naira. Then we calculate our non-current liabilities. Our non-current liability is loan. which is 31,000 naira, and trade payable, which is 44,500 naira. The total of all this will give us total capital and liabilities will give us 65,500 naira. I hope that is quite understood. If you don't understand, you ask questions. Now let's go to the exercise given by ICAN. Let's see if we can actually solve and calculate statement of financial position, trial balance, and the rest. This will be a revision to what we have been doing since. I believe after this you should be very grounded in trial balance, statement of profit and loss, and statement of financial position. Let's quickly look at the questions. Exercise. Emmanuel sets up a trading business of buying and selling of goods. Record the following transaction which occurred during his first month of trading, that is July 2019, in the relevant ledger account. We are now given the first one. Emmanuel introduces 500,000 naira into the business by paying money into the relevant ledger account. The business bought a motor van for 60,000 naira. Payment was made by check. The business bought some inventory for 30,000 naira. Payment was made by check. The entire inventory purchase was sold for 50,000 naira cash. More inventories was purchased for 100,000 naira on credit. 50% of the inventory purchase was sold for 80,000 naira on credit. A payment of 30,000 naira was made to the supplier for some of the purchases. A payment of 40,000 naira was received from a customer for some of the purchases. Emmanuel drew 10,000 naira from the bank account for his personal use. Emmanuel paid 2,000 naira for diesel for the motor van using a business check. The business paid 15,000 naira by check for the premium on an insurance policy. The business received a bank loan of 100,000 naira repayable within 2 years. Post all the transactions into their various ledger accounts, then close off all the accounts and extract a trial balance. With the trial balance, you're expected to prepare a statement of profit and loss account and a statement of financial position, assuming Emmanuel's closing inventory is 50,000 naira. Now we're going to start with the first one. Emmanuel introduced 500,000 naira into the business. Now he's introducing money into a business. That means you are going to debit bank and you are going to credit capital. Why are we debiting bank? Why are we crediting capital? I explained this in the previous class. Capital is giving bank 500,000 naira. So since capital is given, you credit capital, then the one receiving, you debit that particular account. So this is our account. That means capital 500,000 naira, capital bank 500,000 naira in the credit side and in the debit side. Remember, we must have two accounts for every ledger, or rather for every transaction we must have two accounts. Number 2, the business bought a motor van for 60,000 naira. Payment was made by check. That means you debit motor van and then you credit bank. It's already there. Remember, we already have debited bank before capital, and then we credit bank motor van 60,000 naira. Credit motor van 60,000 naira. The business bought some inventory for 30,000 naira, paying by check. So you debit purchases, buy to purchase, and then you credit bank. Bank is giving purchases money. So we already have it there. Bank is giving purchases 30,000 naira, while purchases is collecting bank 30,000 naira. The entire inventory purchase was sold for 50,000 naira cash. That means we are going to debit bank. Bank is collecting money, and then you credit sales. Sales is given to bank. So we have our account there where we debit bank and then credit sales. More inventories was purchased, 100,000 naira on credit. You debit purchase and you credit trade payables, because trade payables is where the business has to actually pay to the bank, pay to people being owed. Trade payables is when a business owes another entity, probably a customer, money or goods. Now the inventory was purchased 100,000 naira on credit, so you credit trade payables and then you debit purchases, which we have there: credit trade payables, debit purchases. Now 50% of the inventory purchase was sold for 80,000 naira on credit. This was used so that we will be a little bit confused, but don't be confused. That means 50% of that 100,000 was sold. That is the profit there was, sorry, the price of 50,000 naira, and then a profit of 30,000 naira was made there. So don't be confused, just follow like that. Trade receivables, you debit trade receivables because it was sold on credit, and then you credit sales, which we already have there. Then a payment of 30,000 naira was made to the supplier for some of the purchases. You debit trade payables and then you credit bank. That is trade payables, you debit them 30,000, then you credit bank 30,000 naira. If you excuse me, I have to correct that. Okay, it's right here. Credit trade payables 30,000 naira. Then 8, a payment of 40,000 naira was received from a customer for some of the purchases. That means you debit bank and then you credit trade receivables. Trade receivables. Then bank, then trade receivables. We have already done that. You credit bank 40,000 naira. That is that. You debit bank 40,000 naira and then you credit trade receivables 40,000 naira. Emmanuel drew 10,000 naira from the bank for his personal use. That is drawings. You debit bank 10,000 naira and then you credit what? Sorry, you debit drawings 10,000 naira and then you credit bank 10,000 naira. Emmanuel paid 2,000 naira for diesels for the motor van using a business check. What does that mean? You debit motor expenses or motor van expenses, as you please, and then credit bank. So it's already here. See, our bank is getting full by the day. Then the 11th one, the business paid 15,000 naira by check for the premium on an insurance policy. We open a new account. You debit insurance account and then you credit bank account. That's we have there bank account, you debit 15,000 naira and credit insurance, which is what? 15,000 naira. Then the last one, the business received a bank loan of 100,000 naira repayable within 2 years. That means more than 12 months. So it's not a short term, it's not a current liability, it's a non-current liability. So you debit what? Bank and then you credit loan, which is already there. Now that will take us to what? Our trial balance. We close off the accounts and then we'll post them in trial balance. I have explained how we close off accounts. We make the accounts equal. That means the debit side and the credit side must be equal. When we add them, we discover that the debit side is more than the credit side in bank. So because of that, we'll bring balance carried down 543,000 naira to make it equal with the debit side. And then in the debit side, we write balance brought down 543,000 naira. That will take us to loan. The same thing will be done in loan. We close the account. Balance brought down 100,000 naira. We do the same thing with insurance. Balance brought down 15,000 naira. Motor expenses, balance brought down 2,000 naira. Now, this balance brought down are what you will use for the trial balance. Balance brought down and balance carried down are what you use for the trial balance. So you have to be very careful. Drawings, the same thing goes for drawings. You do the same thing for drawings. Trade receivables, all the accounts that were there, same thing will be done to all of them. Van, balance brought down 60,000 naira. Purchases, balance brought down 130,000 naira. Capital, balance brought down 500,000 naira. you attempt it on your own before you check the solutions and make sure that you quite understand it. Now, June, that will take us to what? Trial balance. Trial balance, we're going to divide into two: credit and debit side. Credit and debit side. Now, why divide into two: credit and debit side? Now, in the trial balance, we'll put them in their various ledgers, in the transaction in their various accounts. Whether it's, sorry, put them in their various sites, if it's debit or credit. Now, bank is 543,000. Remember, balance brought down is 543,000 naira. So put it in the debit side. Capital is a liability, fixed in the credit side. Van is an expense, debit side, 60,000 naira. Purchase and expense, 130,000 naira. We'll put it in a debit side. Remember that we said that assets and expenses stay in the debit side, while liabilities and income stay in the credit side. Trade payables, liabilities, 70,000 naira. Trade receivables, assets, 40,000 naira. Sales, 130,000 naira. Drawings, 10,000 naira. Motor expenses, 2,000 naira. Insurance, 15,000 naira. Bank loan, 100,000 naira, which will make it equal. Our debit and credit side will be equal. If they're not equal, something is wrong. The account is wrong. So it will be 800,000 naira each. They must be equal. I hope that is understood. That will take us to statement of profit and loss as at 30th June 2019. Sales is supposed to be 130,000 naira. Yeah, sorry for that. Sales 130,000 naira. Opening inventory 0. Purchases 130,000 naira, which will give us 130,000 naira. Remember, our closing inventory was 50,000 naira, so we subtract it to get our cost of sales, which is 80,000 naira, and then we get our gross profit. When we subtract this cost of sales from the when we subtract this cost of sales from the sales, we get our gross profit, which is 50,000 naira. Then with less expenses, unlike the last one, we have expenses in this particular one. We have expenses. Our expenses are motor expenses and insurance, which when we add together will give us 70,000 naira, which we less from the gross profit to get the net profit. And net profit is 33,000 naira. I believe that is understood, which will take us to our statement of financial position. Statement of financial position as at 30th June 2019. In statement of financial position, what do? We'll start with the non-current assets as we did before. Non-current assets, van is the non-current asset, 60,000 naira. Then current assets, we start with inventory, which is 50,000 naira. Trade receivables, 40,000 naira. Bank, 540,000 naira. Total is 633,000 naira. That means when we add it to the non-current assets, we have our total assets, which is 693,000 naira. Capital at 1st June 2019 is 500,000 naira. Net profit is 33,000 naira. We add them together, we have 533,000 naira. Then we less drawings, which is 10,000 naira, and that will give us what? Capital at 30th June 2019 we give us 523,000 naira. Then we'll go to our non-current liability, bank loan 100,000. Then we'll go to our current liabilities, trade payable 70,000 naira. When we add them together, what we'll be having will be 693,000 naira. That is total capital liability, which is also the same thing as total assets. So if they are not correct, if you do solve yours and it's not correct, you are not correct. So you can attempt other questions, or if you want during the class teaching for today, or during the class teaching, questions will be posed as if requested. Questions will be posed to the students, and the students should try to attempt these questions. Have a lovely day ahead.